Canada always had an expensive real estate market, especially in the more coveted areas of Vancouver and Toronto. And as of September of 2022, the average price of a home in Toronto has reached $1.1 million Canadian or $815,000 American, while Vancouver's average home price has reached $1.15 million Canadian or $850,000 American, both making its way to the top 10 most expensive real estate markets in the world. Real estate prices in Canada have reached astronomical levels thanks to a ton of factors, including poor supply and demand, as well as a growing local and immigrant populations in the country. Canada's Prime Minister, Justin Trudeau, attempts to fix the country's overpriced market with a few plans and policies that aim to make the real estate market fair for prospective homebuyers. However, these policies might just backfire in undesirable ways, and many critics aren't too happy with the possible outcomes. First, let's head over to what Trudeau's exact plans are and why he might have just crashed the real estate market in Canada. But before we get into the video, please like and subscribe to my channel because I'm going to give you guys the best information out there about Canada's real estate and American real estate and how you can protect your money and make more money during this recession. Canada's real estate market has always been on the upward trend, but the combination of the pandemic, rising interest rates, immigration, growing population, and an overall slump in the economy have put a stop to the sky-high prices in the real estate market. In 2022, Trudeau outlined his plans for the real estate market in the Budget 2022, a plan to grow our economy and make life more affordable. In the first stage of his plan, the government aims to double housing construction over the next decade to directly answer the housing shortage in Canada. 4 billion Canadian dollars is to be invested in the launching of a new housing accelerator fund that will help create 100,000 new housing units over the next 5 years. Another 1.5 billion dollars Canadian is to be invested in the Rapid Housing Initiative to create 6,000 more affordable houses across Canada. The Canadian Prime Minister may have good intentions, but later on you'll see the shortcomings of this plan. The next stage by Trudeau is to help potential homebuyers, especially the first-time homebuyers, in this tax-free first home savings account. This allows first-time homebuyers to save up to $40,000 and take advantage of a doubled first-time homebuyers tax credit of up to $10,000 and have the first-time homebuyer incentive extended to March 31st of 2025. In conjunction with this, the Canadian government is also investing $200 million to develop rent-to-own projects across Canada, and most controversially, the Trudeau government is imposing a 2-year ban on foreign capital coming into Canada to buy residential real estate. Trudeau also mentions that there is an increased attention in making sure that property flippers pay their fair share, as well as protecting home buyers' rights by implanting a home buyer's bill of rights, mainly to end blind bidding. And according to Trudeau himself, and I quote, "Making life more affordable for Canadians starts with addressing housing affordability. All Canadians deserve a safe place to live, raise their families, and build their future. Budget 22 will put home ownership in reach for more Canadians while creating jobs and growing the economy." And now, in addition to this, Finance Minister Chrystia Freeland said, and I quote, "We will do everything we can to make the market fair for Canadians." This budget represents perhaps the most ambitious plan that Canada has ever had to solve that fundamental problem. While the intention behind the proposed solutions is definitely commendable, the manner of which Trudeau and his government wishes to address the real estate problem in Canada still has problems that could end up doing more harm than good. Statistics Canada unveiled that 1 out of 6 Canadian homes are owned by individual investors, people who own multiple dwellings. Around 30% of homes in British Columbia and Ontario are owned by individual investors. That's a huge number. Similarly, 25% of homes in New Brunswick and Nova Scotia are also owned by investors. Adding to the real estate investor fire, 5 to 10% of Canadian homes are owned by corporations who often hide behind real names of their owners. Andy Yan, head of Simon Fraser University's City program, claims that this is one of the more immediate problems of the real estate market that wasn't addressed, which is hoarding. While a considerable share of the market being owned by corporations and investors, addressing the issue of hoarding would have been a great step in addressing the real estate problem overall. Yet it remains unspoken of and with no remedies in place. Experts also argue that while there is indeed a housing shortage in Canada, the need to build 3.5 million new housing units is seen as excessive to some, a number Trudeau specifically mentioned in one of his many addresses. Steve Pomeroy, a housing policy consultant and professor at Carleton University in Ottawa, claims that while there is definitely a need for new housing units, 3.5 million is a complete exaggeration. Pomeroy also states the consequence if we do try to increase it is we will run into a whole bunch of other issues in the supply chain, labor, land, and materials, and will actually push house prices even higher. There's also an issue of oversupplying the market thanks to more intense construction blitz. In fact, the last time Canada faced a significant period of home price downfall is due to the building boom, which dates back to the early 90s. Coupled with the rising interest rates, this situation isn't far from impossible, and we may see history repeat itself for the Great White North. There's also another problem: politics and the potential conflict of interest. Housing Minister Ahmed Hassan wishes to protect mom-and-pop investors or inexperienced investors that minimally invest in real estate despite limited capital commitments. On the contrary, Global News reporter Amanda Connolly found that roughly 1/3 of federal Liberal cabinet ministers own investment properties. This then blurs the line of the government's intention whether they truly want to help mom-and-pop investors or want only to benefit for their own mom-and-pop investments. Critics aren't happy with this call and constantly bring up the fact that housing prices only doubled since Trudeau sat in his position in 2015. With many of the new policies seemingly missing key problem points, it won't be a surprise if this fix to the real estate market ends up with the Canadian real estate market with more holes. The Canadian government is aware of the problems the real estate market is facing now, especially in the last 2 years where housing prices shot up to unimaginable highs. Because of this, Trudeau and his government aims to implement a few plans and policies to remedy the expensive and limited housing market. However, while a few problems were addressed, some critical ones remain unanswered. This is one of those instances where time will tell. It's easy to be wowed by the current promises of the government, but it's only easy to be wowed since many other problems were left out. And for normal Canadian citizens, they may trip in the pitfall thinking that the government has wonderfully solved the housing crisis in their country when that's far from the case. For more up-to-date information on real estate and identifying your next big opportunity, please make sure you like and subscribe to my channel. We're here to give you the best information out there. And what do you think of Justin Trudeau's plan, and do you foresee it as being a problem or a solution? Let me know down in the comments what you think, and I'll see you on the next one.